Good morning, everybody. Welcome to the Flow Show. A new week begins in the life of us traders, hoping to make a few pips this week. Hope you're doing well. Hope you all had a good weekend. Morning, K-Man. How you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, new week, new start, plenty of events to try and get something out of there. It looks a bit quiet this morning in Europe, huh?
Yeah, it was a bit quiet. All the action happening elsewhere, it seems, which we'll get stuck into. China, particularly, been very active this morning. Late on Friday, they said that the China Central Bank (PBOC) says that monetary policy will be kept prudent and will effectively stabilise and guide market expectations. Then they've spent pretty much most of their morning cutting various rates. They cut their 7-day reverse repo rate by 10 pips from 1.8 to 2.7. They lowered their SLF rate for 7-day and 1 month by 10 pips also. They cut their loan prime rate for the 1 year and 5 year by 10 pips apiece also. Then they've reduced their collateral for their MLF operations, which is apparently a move to increase the scale of tradable bonds with the aim to ease supply and demand pressures in the bond market. That's part of what they've been getting up to with potentially borrowing bonds to sell on the market. So a big round of rate cuts, broad rate cuts, not big rate cuts, though, only 10 pips, which in their words is not resorting to flood-like stimulus. Not gone as far as an RRR cut yet. That may be coming, and the market may be expecting that to pop up, but it wouldn't be a surprise if they did that now. This is all obviously following the big state meeting that they had last week, which didn't really produce much for markets, but it looks like they are wanting to get things moving over in China, get the economy back on its feet. So we'll see whether all these rate cuts bear fruit. What did you make of that little lot, Kay?
Yep. After the plenum was done, they said they would put a framework in place and stuff, but without too many details. And I guess we are starting to see the details of what they really want to do with everything. And yeah, that's perhaps just the start of let's call it mini bazookas coming out of the woods. And that's about it, really. It seems like the PBOC and all those governing bodies were waiting for this plenum to be over to put stuff in place, and maybe only the beginning of stuff. Now we'll see what they do, whether they do they put any things in place regarding foreign investors, but so far it's all still pretty much directed at getting their local economy back out of the slump.
Yeah, and we've got apparently we've got this meeting happening where US executives of big financials and banks are going to be going over to China this week. I think it was slated for, so we'll see if we get any headlines from that that might further get things going. Sorry, mate, what was you?
No, true. I forgot about that one. Yeah, absolutely.
Yeah, so we'll see what comes from that. In the meanwhile, dollar China back up trading around the 729s. We haven't been there for a week or two, so we're back up there, getting well above that 728 zone. I'm still long, bought the dips down here, so I've been chopping a bit this morning, but we'll wait and see if we get another look up towards this 731s, 732s that we got up to last time around here, which is still a bit of a zone that we need to keep an eye on for the one weakening further. And on that, they're still keeping the fixes up in the 713s for now. 713.35 was the overnight reference rate there. So they're still happy to let the brakes off on weakening for this one. Then they've probably also got a big eye on what's happening with the US elections and what's that's going to mean for potential tariffs and whatnot. Because obviously weakening the yuan, as we explained last week, is one tool they could use to offset some of those tariffs. Right, moving on to Japan, PM Kishida says that monetary policy normalization will support the transition to a growth-driven economic stage, speaking in an interview with the Nikkei. One of the senior party officials of the LDP, Motegi, says that the BOJ should more clearly indicate its policy normalization path, including the chance of several staged rate hikes. So he wants the BOJ to give a big long timeline of what they're going to do with policy and rates. Two hopes, I reckon, on that, but you never know. We might get something at the next BOJ meeting. Over at the ECB's Casimir says that market bets on 2 or more rate cuts by year end is not entirely misplaced, but it's not a given either. Says there's no need to rush decisions, and data will set the stage for a September decision. Another one sounding like he's got his bags packed for the summer and won't be making any decisions until they get to September. A bit of data last week, not an awful lot out, but we got some Canada retail sales, and PPI, which again perhaps made a bit of a case for a rate cut this week. We got the BOC this week. Retail sales coming in a soggy minus 0.8, worse than expected. Data is a bit lagging because it's still only ticking over May's data. Whereas PPI data, raw material price data, coming in on the soft side, although the year-on-year numbers were up a little bit, but the month-on-month numbers showing negatives there. So is keeping a disinflation process going on there. I don't know if you know the latest rate expectations. We're around 90% K when we had the CPI last week. Has that increased anymore since?
I haven't seen the latest data, but I trust those retail sales data haven't changed anything, right? So even though they are a month delayed, in Canada, those are still May numbers. No, but I trust. I think at the time itself, it ticked up another few percentage points, and just keeping the Canada on its toes, and well, pretty well offered against a lot of stuff.
Yeah, exactly. Right, so it happened at last. The worst kept secret and probably the most certain trade that was going to happen. Biden's out. Over the weekend, he decided that was it. Enough was enough, so he's pulled out. He's endorsed Kamala Harris as his choice to take over. She's been picked up by a lot of the big Democratic donors are putting their weight behind her as well. It's looking like for now, she's going to be in the front running to replace him. She's pretty much, I don't know, in would you call it in Star Wars terms? She's the Sith Lord's apprentice, maybe, Kay. She's going to be like a bit of Mark II, I think, in real terms.
Yeah.
Not really a change, is it?
Yeah, probably if she gets confirmed, which is not a done thing yet. We have like a month or so until the Democrat National Congress, right?
Yeah.
So there's still other candidates who could come forward in the next weeks. But if it would be Kamala, yeah, that's a continuation program, as you say. I think, well, I'm a bit like the market right now. I mean, it's it would be tempting to continue the Trump 2.0 trade, but on the other hand, I'm also happy to sit back and have a look what the Americans think of all of this when they walk in. Yeah, it's I don't have a pretty big view on it. The last week we were talking about it in the room because we talk about all that stuff, of course, very very often in the room in our different chat rooms. It's like a bit of a consensus that whether it's Kamala or Biden, of course, I mean Biden has his issues, but it would be like kind of same old. And whether she would have enough weight to put in the scale against Trump is still remains to be seen, and it's not the consensus that she would have. The one thing though is that we could not have a complete Republican sweep, and yeah, that perhaps puts enough uncertainty in how the markets are looking at it right now. So yeah, it's far from really clear cut, although the big lines remain pretty much the same, and then you see the market; they are barely reacted to any of it, right?
Yeah, no one can sit in now and say they're gonna set themselves positioned for this, that, and the other, based on the election that's still 4 months away. So we have had indications how the market is looking to trade it, i.e., what happened with let's call it the Trump trade over the last couple of weeks. There wasn't that much reaction, well, very little reaction to the Biden news. Again, everyone knew it was likely to happen. And there's still a long way to go until we get a final name put forward at this convention, which I think starts 29th of August. One of our many Michaels in the room prompted
19th.
last night. Yes, mate.
I saw 19th.
19th, is it?
I think the convention is 1922, if I saw that correctly.
Okay, I know it had a 9 in it somewhere, but anyway, yeah, and those, as far as I understand, these conferences are where it's actually rubber stamped who's going to be put forward. So even though Trump is the clear winner already amongst candidates in the Republican Party, it still took the RNC for it to be all formalised. I think the same happens at the Democrat convention. So, yeah, still a lot of people, many people can throw their hat into the ring between now and then. So, yeah, can't trade it too much, but we've had an indication of how the market would potentially look to trade it. That's it as far as I've got on the headline front. Not a lot going on to start the week. Anything on your side, Kay?
Geopolitics are still rumbling in the Middle East, and some additional stress again in the Chinese sea. So that is still not going away, because there have been bombings and retaliations and whatever, between the Houthis and Israel, and in China as well, between Taiwan and the Philippines and whoever else in there is don't agree on borders. Yeah, it's still ongoing, and we're still just keeping half an eye on it because the market's not really reacting to much of it right now, but you can't completely rule it out, right?
Yeah, exactly. Lots of plates spinning in the air and trying to keep an eye on them. It's become a bit of a tough job. I'm gonna start. We look at prices. Just one thing, again, talking about possible election trades. We've seen US oil coming lower, even as we've seen this, bit of a pickup, as Kay mentioned, Israel Houthis and people lobbing crap at each other over there. A bit of this, or maybe a lot of this, is that Trump is apparently going to ramp up production of US oil. He wants to get prices down, and he feels the best way to do that is to get production up. So that's going to be weighing on oil. And again, it's just another indication of how many assets and different parts of the market are going to be affected by this election. So it's going to muddy the waters a bit between obviously what we look at for the fundamental side of things, demand and whatever, and then what's going to happen with political policy, fiscal policy, and things like that, which can muddy the waters over the next few months ahead. So yeah, that one's definitely one to keep an eye on. Oil markets in that sense. If he does go gangbusters for increasing production, we could be seeing oil back down towards the low 60s, mid to low 60s. And then we raise the question of what happens to the SPR and what happens to OPEC Plus and what they're going to do about the drag from lower oil prices. So lots in the mix for that one. Yields, still don't know what they want to do down here. Looking at tens, you know, still mooching around this 420 area. Had a little poke underneath, couldn't hold it, couldn't make further inroads on that. Now we're back above again. If anything, it's keeping the dollar, well, outside the dollar yen, it's keeping the dollar largely contained, shall we say. You know, we've had some pairs pulling back. Euro dollar pull back, we've had cable pulling back, but now we're seeing a little bit of bounce. So the correlations are still a bit iffy, Kay, I think, between some of these things, but it just looks like everything's mainly going sideways at the moment.
Yes, because we are not only looking at yields when we trade the dollar on the back of it now, but you're also looking at the curve, how it steepens, how it flattens. We are just flattening just that tiny bit right now. After nearly a week of steepening, and that may play as well, and it may look your 10-year or the 10-year. It's not only ours. It may make it look a little bit random for now, because you don't only trade well, auctions or expected fiscal policy, but you also trade the curve, and yeah, that is for us. I mean, it doesn't. It makes the correlations that little bit more muddy, you know. So you have to look at a couple of things. So I'd say for now, just keep it simple and look actually what the US wants to do with their own markets, because that will probably be a bit key of what's happening this week. Now we have had this Biden news and all the rest, and looking at how oil moves, also how the other commodities move, because they're like really weak right now. So yeah, we have to look at a couple of things and then let the market do its thing, you know.
Yeah, very much so. Right, just before we look at something else, let's look at what's coming up this week as well. It's a half-hearted data week. This week we've got a few bits and pieces out. It's a PMI week, so they're going to be kicking off. Nothing really out today. Tomorrow we get some further housing data from the US. PMIs all start on Wednesday, so we get another look at services and manufacturing for the new month of July. The BOC on Wednesday is probably going to be one of the biggest items of the week, just to see what they're going to do with rates. As mentioned, very high expectations that they cut rates another 25 pips, but I think the important thing to get from this meeting is how their divergence with the Fed is going to go, because they mentioned after their first cut that there is a limit to how far they may cut if the Fed's not cutting. So this will put them just under 100 basis points difference in rates. So the market will need to know what their appetite is for further cuts versus the Fed sitting on their hands. So that's going to be the main take from that one. Then we get further housing data from the US later on, new home sales. Keep an eye on the numbers there and the prices. Last week we did see a pickup in starts and permits, so we were seeing a little trend, a 3-month trend of lower numbers, and then that got reversed last week. Is it a dead cat bounce, or is it the start of another pickup in data, again showing that the path to US weakness isn't going to be a straight line? Big numbers on Thursday via the GDP data. This is the first Q2 numbers from the US. We did have some Q2 data from a couple of countries last week, but the US is going to be a big one. Expected to see GDP picking up to 1.9% from 1.4%. That 1.4% was a bit of a shock to the market in Q1, coming in very much lower. The models, I think, are still pointing around 2.2. Some of the old nowcasts,
Atlanta
casts
Yeah, the Atlanta model is the Atlanta Fed model is reviewed virtually every day. Yeah, it was around 2.5, 2.7 of late, but we know it can vary, and the actual result being relatively far away from it. Remember last year they were actually pretty okay because they were calling for a high one, but they were still relatively far away from the actual data. Now they are looking for definitely looking for a pickup from Q1. Yeah, that's I think for the dollar, that if the political situation like calms down a bit in the sense of everybody's going to chit chat, right? Everybody is going to absolutely comment on it, but I mean, no new major events this week. I think this GDP will probably be the major event of the week for the dollar, and then you trade the rest around it. Yeah, I agree as well on Canada if they confirm the cuts. We also know that Stephens was saying that there are limits to how much they can diverge from the Fed rates, but they can diverge from it. So let's see if he comments in any way or shape about the divergence between the Bank of Canada and the Fed, because that could hint at they are done after this week's, which is now above 91%. Thanks, Mark. And the expectations apparently, so 91 or so percent, which is, let's give and take those few percentage points. It's pretty much a done thing for this week. So yeah, those are those two events, I guess, for this week. Geopolitics or other politics taken away from it.
Yeah. Now, one thing I want to add about the GDP numbers. This is one of those funky times of the year. In those GDP numbers, we get the estimates for Q2 PCE, which is estimating the June PCE data, which we don't get until Friday. And now officially, the numbers on Friday aren't known to the people who are producing the GDP report on Thursday. But I never know. What I can say is that what often happens is that people will extrapolate the data in the Q2 numbers as to what will be coming the following day in the June numbers. So on its own, PCE would be an important data point coming after the CPI data. But when it's coming after these estimated datas, the PCE and the GDP probably be more important in terms of what gets traded than the PCE on Friday. So as I say, it's just one of those funky times we get every quarter where they decide to drop PCE after the GDP numbers, the first GDP numbers. So yeah, if you're looking out for PCE on Friday, you probably want to pay attention to what they are in the Q2 data on Thursday.
Keep it simple.
Yeah,
it's exactly simple. I mean, on X and everywhere else, they're always dissecting all those numbers into 10 subdivisions. But when really the market reacts to big data points, and then you see whether it's holding the moves or not. And for us, I think we sometimes let ourselves go into those revisions of revisions, and but the market in the end still trades the headline data points, and we should really keep it simple most of the time, you know.
Yeah, exactly. On Friday, do get some Aussie retail sales too, so that'd be something for anyone who's trading the Aussie dollar to keep an eye on. And late Sunday night or early Monday morning, depending on where you are in the world, there's some labour data out of New Zealand for you Kiwi traders as well. So a little bit, we've got some stuff to keep us busy during the week, but it's not a hugely massive week. And then obviously the week after we'll start getting into end of month Feds, other BOJs and NFPs and all the other sort of stuff. So enjoy this week. Next week is going to be a little bit busier. Funny enough, I'm off next week. I'll give you that early heads up. So
you just made someone extremely happy there to talk about month end on the 22nd. Magic, yes. That's one for you, mate.
Yeah, yellow card for me. Yellow card for me, and I'll take one for the team this time, Magics, if you're watching. Right, let's have a look a bit more. Yeah, I'm a bit surprised. Well, not surprised. I don't know what's going on in the end. You got any reason for what's going on in the end at the moment?
Well, there's been apparently, and again, I mean, if you look at the CFTC data, it didn't show up, but apparently towards the end of the week, second half of the week, last week, and I guess it's the same today. They may have done a bit of rate checking, perhaps, but apparently the short yen positions have really been screwed back, and again, we don't see it in those data yet. And but I'm always taking those data with like huge bags of salt. But we are back to what I was saying a good while ago. We are now what is it? A week and a half away from the Fed, from the Bank of Japan as well, and we can see speculation starting to filter into the market, and I've also highlighted those high 157s in the dollar yen, which could be the resistance now, and we went to relatively close to it, but been talking about it. This is perhaps not the time to be very short yen either, because we could see waves like this, people getting out of positions. Also, what I would like to add today, you also have this correlation between what's happening in the Nikkei, the topics, and what is happening with the yen, right? And we saw the Nikkei dumping quite a bit back below 40K today, and that I think is also not strange to what the market happened. It was relatively quiet in really the Tokyo time, but then people wait for the early Europeans perhaps to come in, to have a little bit more liquidity, and then get out of those positions. A bit of comments here and there. I would say that we should expect more of those kind of moves going into the Bank of Japan end of next week. Okay, the expectations are going to ramp up, because not only because of those bond buying being scaled back. We don't know the tenure of how much they will scale back it by. There will be also the risk of higher interest rates. There is a bit of the uncertainty how the interest rates are moving elsewhere. So we are going to see these kind of moves. Now, this being said, what we see here, yes, we are not going back to 116 dollar yen or so, but the rest of the dollars have been a bit on the defensive as well in some by I think some stages. But yeah, I think it's more like starting to prepare what the BOJ may do, and so I guess we can see more of the same. Now, do I think the yen is breaking higher? Let's put it that way. That remains to be seen, because now, and I'll show it in a minute. Again, we've had a few tests of some of those yen pairs crosses, and they are coming back to the first retracement levels, but not breaking right now. Okay. Yeah, okay, thanks, Patrick. Yeah, the BOJ was at the dollar swap window last week as well. Yeah, I mean, everything is going paired now, one with each other. The dollar swap could be that they used it to fund their dollar sales for the MOF, the couple of times they did it, right? So and that is what I've been saying as well. They keeping the market on its toes and buying time until we get the BOJ meeting next week.
Yeah, and Himanshu, you've also got to understand that there's increased volatility here. You know, we've got I look at the 1 month at the money vols. You know, euro dollar's trading at 5.24, dollar yen's trading up near 10, 9.75%. So you've still got that increased volatility. So you see a 10 pip move in euro dollar, it's going to be 30, 40, 50 pips in dollar yen at the moment. So what looks like a big move is just normal market moving around. But because there's that much greater volatility in there, and there's a lot more nervousness in here by, traders worried about further interventions and whatever, you are going to see, a lot of, big moves that are big now, but weren't 6 months ago, sort of thing. So just remember to take in the volatility. A 50 pip sudden drop in dollar yen doesn't mean something's happened. It's just the magnitude of the volatility that's creating those bigger moves. So look at it in that context as well. Kay, do you want me to throw it over then? So you can have a look at some of those yen crosses.
Yeah, sure, man.
There you go.
So let's talk about the yen then. Here is the daily dollar yen. So look what we did with that washout, that we had on the back of interventions, on the back of data. Give and take algo pips. We tagged the underside of the daily cloud. We did it again now this morning, the top side. This is one that the Japanese traders are monitoring very closely. And as we can see, since we started 2024, we never had a close below the cloud. So get a close below the cloud, then you may see a bit more moves. I think still the big one, it's going to be 155.5, 156.25, and then the big one here, around 155. If that would go at one stage, then I think that we may start to call a reversal. Everybody is trying to call reversals all the time. As soon as it goes down 50, 60 pips, that's it. We are done. It is all possible, but then look, we've had a few of those, intervention or not driven. But again, here, we are going to need help from, first of all, the Bank of Japan, what they do next week. And then we are going to need help from what's happening around X outside of Japan. And then I'm going to just show you, because even with the stress that's, or with the uncertainty, let's say, surrounding the post-French elections or so, perhaps this is also going to show up this line, but I'm prefer to keep this one. Look, I mean, this is December, and I showed it last week as well. This is December, the low in December on the euro yen. So this is 24, let's call it 24 year to date, 23.6, 100 point, call it 10.15 on the euro yen. And look what we did. Tagged it once, or tried to go below once, bounced. Tagged it twice this morning again, bounced again. So if you look at it, the medium term, we're still not, I wouldn't call this a reversal. Of course, every reversal start, I'm going to repeat this, with a move down. But for as long as we don't start to break like really serious supports somewhere, we can still not call this reversals, right? So I would still be careful if we hold like even a good trend line in the 169s, for instance, on the euro yen, and you can put virtually all those yen crosses, all those yen pairs, you can virtually put them in the same boat. Okay, this is the sterling yen. 23.6 comes in at 201.40, and we haven't even tested it. And yes, we are back into the channel here, we could argue, but I mean, it's still an upward channel. Okay. So I would say that still be somewhat careful. And people are selling rallies. Yes, you can sell rallies, because I also said last week high 157s, that should be a bit of a resistance zone in the dollar yen. It actually went up there, tried it, and we're back down. So I think we are going to be in faster, but still ranges until the Bank of Japan, or we know something more about the Fed, or something going wrong in the US market, in which case we can go much lower. An interesting one that I want to show today, S&P. Last week we had a pretty decent clear out. We had expiries as well here and there in the VIX, and and in other stuff, and we went to test 5,500, nearly down to, well, just perhaps like a couple of points lower, and now we are bouncing again. And this is a pretty important one, 54.90, 5,500. I would really keep it in mind, because this could be like one part liquidation, and then, well, liquidation, take profit, really flows, and then we can start to go up again. That'll depend on how I think the rates environment also evolves, and we have to know that there's a pretty decent, especially in the belly this week, auction week again. So watch what's happening in the 5s, the 7s this week. So that could be a driver as well. But we've tested that red line here. We've tested the support, and for the time being, it's holding. So I would say, be careful. Don't go blindly short either. You can perhaps look at what's happening around 55.5, 55.80. If we get a bounce here, that could show up now as a resistance, and then we retest lower. But this is no more than what we've seen here as well. May we had a bit of a move lower, and here we are seeing this move lower as well, and then we ramped higher to fresh highs. Okay, so yeah, it's an interesting level here on the 5,500. Okay, what else, guys? Gold. You are gold. Bit of a trend line here. I scooped some up end of last week. See if that holds. We have like several levels here. Fibonacci, trend line, prior high, all happening in the 87, call it 85, 2385, 2400. Let's see what the states want to do with it this afternoon. I wasn't really impressed on that little uptick that we saw yesterday at the open as a reaction on the Biden announcement, withdrawing his presidential candidature. I wasn't really impressed to not really go higher. But again, let's see what the states want to do with this when they walk in. As you know, I let everything go on my long goals that I had from this zone here last week. Now I'm just small. It's just a feeler. I'm trying to see if we hold this zone. If we don't, no sweat. I'll be out of it and back into reflection time. Silver quite underperforming, very underperforming gold. Yeah, I said this would be on the various shows. I said this would be a bit of a risk that we have now. Silver underperforming, but we are holding around 28.90, 29 the figure right now. So this could be encouraging. But I haven't had anything, because I think there still is a risk for us to go and retest those mid 28s, even low 28s or so around here before this is over. But we will see. Of course, now we are, if we're building a range here, it's going to be 29.30, $29 to $30. That's the new range. I wouldn't think that for now there's enough power in these to break back above 30. So range, yes, with the potential to go and test a bit lower, I would say. One that took it full in the nose is the Norwegian krone. I tried it here to play the short side on the triangle. Luckily, I covered everything in the shallow dip, because it was already holding around 1170, and then I saw oils not going higher anymore. So I luckily covered everything, threw the Nokia out of the window, and we are breaking above in it's for as long as Brent continues to go lower. Doesn't seem like the Norwegian kroner is going to pick up too much steam here. So be careful with what's happening. For as long as it holds 1180, this thing could be back 12, why not even 12.10, you know, retest those prior highs, those 2023 highs. Right. Anything else? Yeah, Rand still doing what Rand does. Trading inside the triangle as well. Not too much happening on the Rand. The only thing we have to note is that last week I said there could be some resistance 37.44. It did happen. We did go up to 37, and now we're shying back. Perhaps a little bit of range trading before we know anything more. Okay, dollar MEX. Well, I'm quite happy when I said dollar MEX may already find some support in this 83 zone down to 83.75 zone, and that's where it went down to. Then we saw Scheinbaum come out saying that she wants to have a chat, and AMLO as well with Trump. They are seemingly a bit nervous, and it rallied back up through the trend line up to that 1813 level. I'd say I'm going to say we are trading a range right now. I'm okay to say yes, this is going to find bids on dips, because situation between Mexico, the US. We also have Mexican retail sales and economic activity data today. We could go and have a retest, but this line is now, I think, getting watered down a bit. 18, 10, 15, 1880, 1875, Michael. That's yeah, you want to add? Then I'd say either you add on a renewed dip, or you wait for the break above. Right here, I don't see too much of a trade right now. And I'm giving it back to you, Ryan.
Yeah, thank you very much, mate. I'm going to take it over. Just have a quick look at the FTSE for young Catherine here. Not an awful lot to say about this one. You've got a clearly defined range into this low 81s and up into the 83s. And then what you've got is this, let's call it a protective range. So everyone who's buying down here is putting sort of protective bids around here, and everyone who's selling up here is putting protected offers around here. So you've got a little range in between, a wider range. Not much else to say. It's pretty straightforward what's going on here. You're going to need a break above 83s. Or if we break down under 81.10, 81, that's going to look bearish. So a bit of a range play on that one. In the meantime, you can trade either of these levels for now, either way, but be wary of what happens if either of these sides break. You might want to wait for a confirmation rather than trying to run with it, because we've had these little moves that quickly, these little fake outs that haven't lasted long. So either wait for a break and the level to be retested and hold, or, you know, on the other side, if you do go with a break, keep it very tight on the other side in case it does fake out. But sorry, there's nothing exciting to say about this one, Catherine, but for now it's sticking in range, and maybe that's even a bit surprising after we've had the election and the market knows what's what. But the budget, I think the budget and tax plans and everything else that's going to be coming out of the new party might be something that moves the FTSE. You know, if we get some of these multinationals who don't like the outlook for taxes and whatnot, then that could bring some flows out of the FTSE. Yes, mate, would you?
Yeah, I mean, there's something about the FTSE. I always find it does follow other markets and stuff, but then it does its own thing, and then completely quiets down. We've seen other equity markets really move quite a bit, but the FTSE is and I wonder why that the FTSE is actually not one that is really as dynamic as other equity markets. I need to do a bit of research on that, because I've always found it a little bizarre. Underwhelming moves a lot of times versus other equity markets.
Yeah, you probably want to look at something. Well, I was just about to say, you probably look at something that's the all share index, but that's doing exactly the same. So, yeah, it doesn't matter what you look at. There's no clues coming from this one at the moment. Yeah, I don't. The FTSE's always been a strange thing. Obviously, the 100 has the correlation to the pound because of all the multinationals and profits going in and out and whatever. But I still don't know why it doesn't. When you've got countries like Germany who are effectively in recession and their stock markets are taking off to all-time highs, and meanwhile you look at the FTSE, whatever metric, and it's doing nothing. But you can take a longer-term picture. It is up at its all-time highs, close to. So you can level that, stick at it a bit, but doesn't have the volatility that others have, which can be good for trading as well, because then you get these ranges and they're more likely to hold than not. But anyway, that's that on the FTSE. And on that note, we will call it a day for today. So again, I hope you have a great week. Kay, you're off for the rest of the week, aren't you?
I'll be back on Friday, just taking a few days off for a proud parents moment, since my youngest is graduating this week. So we're going up to Bath and enjoy a couple of days together over there, and go
Lovely.
to the ceremony and whatnot. And I'll be back on a Friday.
Yeah, lovely. And send my congratulations to him as well. I know your kids work very hard at what they do, so well done to him. And proud parents, I know you are, so well done.
Thank you.
Right, have a great day, have a great week, and we shall catch you all. I'll catch you all tomorrow. Have a good one.